Alright guys, glad to have you on board again today. I would like to do this one as kind of a third in a series. We've talked about that for quite some time actually. I think if I remember correctly, the first of it was somewhat around 2022 when we've prepared for the evidence and the mounting evidence of a value crisis, which is a theme that I've been developing throughout the years. And instead of writing a book, I decided to just spread it out throughout these kinds of educative videos. So this one is going to be another one in this series, taking over on those previously explained narratives of what I think the value crisis is going to be, just because this time around I think the timing is fairly appropriate. And I think we have more evidence now on the nature of this actual value crisis to try leveraging up on the kind of shaded gray areas and uncertainties that we have talked about back then. Like, we don't know really what the nature of it will be. We have suggestions and possibilities. I think this time around evidence have lined up quite significantly enough for me to be confident enough to say, I think I know what's going to come. That doesn't mean I know when, that doesn't mean I know how, that doesn't mean anything else, but I think that I know how to navigate it, and how to get prepared for it, and eventually how to invalidate if I could be wrong. Because once again, no one ever know the future, and I don't. The thing is that I just have that kind of track record to say, as a contrarian trader, I am very good at figuring out when the market is going to range, and therefore I will strongly oppose the market sentiment by selling the market top, selling close to the market top when everyone is overarchingly bullish, and I would be totally against all odds, against the general sentiment, and I would look like a perma bear or whatever. Just like on the other side of that range, at the bottom, I would be there to support and buy the dip when everyone will think we're going to crash further and so on, and that the perma bears are raging for more. So I'd like to state it very clearly. I think we're definitely not going for the kind of crash bullshit, whatever. I'm going to buy the support one more time, eyes closed. I don't think we're in kind of systemic crisis that's going to blow it all off. We're terminated. We're all going to die. Bye-bye. No, I think a necessary healthy range is going to happen, yes, yet again. The difference between these ones and the previous ones, which I have a track record. I mean, even back then I said, yeah, we're top-ish, folks. Yet I also called for the bottom in June 2016. Oh, sorry, in 2016, early 2016, when people were freaking out about China, that we're going to collapse the whole economy, whatever shit like that. And I was like, yeah, fuck it, just buy the dip. We have more trend to come. Just like back in 2018, I started to warn about the fact that the market was overarchingly bullish, not breathing enough, and that we're starting to concentrate in a stupid short-term momentum marking with the VIX going to new lows and stuff like that. And I said, no, some shit will happen. I don't know what the fuck it's going to be. All I know is going to be volatile, because back then the VIX was definitely an outlier. So yeah, once again, happened, and as you can see, I was definitely fucking right. 2 years later, we were still trading at the same or averagely the same valuations with a fucking stupid volatile party. Just like when it was happening back then in here, I said, no, folks, I think we're not out of the woods yet. Some people are going overarchingly bullish yet, just like it was sorted out, and we're going to go to infinity. Remember back then, Trump was just tweeting all over the place with the new all-time highs in the Dow Jones and S&P 500, and I was like, no, I think we're not done yet. We're going to go back to support, and I'll buy it. And oh boy, just look at that. COVID came in, very violent, everyone goes caught off guard. I was right, bought the lows. And once again, everybody was freaking the fuck out of this. We all going to die. Remember, we were locked down in our homes, and we all thought things will never recover and that the society all itself will collapse. Yep, once again, I was right. Most people were wrong. That doesn't mean, once again, that I'm a genius and that I know the future. I just mean I goddamn very good at figuring out when market will range. And yes, yet again, 2021, I've warned about the actual mistake of the Federal Reserve kind of transitory bullshit arguments. I've been proven right for 6 or 7 months in a row because, yeah, once again, I don't perfectly time the market and I never will. So I warned about that. I remember some kind of May 2021, and as you can see, the market going straight up for 6 months before, of course, ranging again. So I think this time around, sounding the alarm yet again. I don't know what's going to come. I've warned this for like since May this year. So now we're already 3 to 4 months in. We've gone higher. We've added yet another 5 to 10% to it. So it's the same story over again, folks. Okay, so we're now 7% overdue. We're somewhat 4 to 5 months after the kind of appropriate timing and the signs of actual maturity in the cycle. I don't know how long it's going to last. Could still last another few months, but once again, not calling the shots perfectly, but I have more evidence on the fundamental side saying, oh boy, I think I know what it's going to look like. Though remember, now this time around, we have all evidence by the yield curve that the recession is here. It's going to happen within 3 months to 2 years, and I very likely bet on the short-term end of that stick, which means to me 3 to 6 months, and we're into the recession. Remember that a recession is going to be 2 consecutive quarters, which means we're going to know about the recession a year later, okay? So, well, 6 months later. So if the recession actually starts 6 months from now, and if we know it's 6 months later, that means we'll know the recession 1 year away from now, and believe me, the market will already be in the middle of a bear market by then. Though that's what it is. I think we need to get ahead of the curve while not knowing anything about it. The data will confirm afterwards, but we have all evidence to see that the job market is weakening by the day. There's no way anyone can stop it. It's not just, hey, we're going to print our way out of this. So many people tend to argue that we're going to get an election year, so we're going to be safe. They're not going to let the market crash. I mean, fuck it, folks. Do you really, are you really that stupid? Like the market cares? No, it doesn't. Surely, we also mentioned that the treasury accounts are loaded up with cash to support and eventually delay it. Canceling a recession with a few $1 billion is not going to make it. Even if we are talking about $1.5 trillion, which is enormous here, we're talking about a big problem, which means we're all locked in between a rock and a scissor. That's exactly where I think the US economy is in now. We do have some speculative bubble, clearly visible on the big 7 names. We all know which we're talking about. I'm actually recording this thing 2 days before we actually get the earnings release on NVIDIA, and it feels like the future of the S&P 500 depends on this alone, which, frankly speaking, is just staggering. It just sets the stage for how volatile this can happen, because it's going to V-top. We know one thing for sure, NVIDIA is going to be a V-top. Is it going to be now because earnings are going to miss or disappoint for whatever reason, and we're going to get a massive drawdown, like a 10 or 15% drawdown overnight after the earnings release, or yet another 20% pop, all-time highs again, baby, and going to infinity yet another time until this thing crashes all over the place. So it's stupid, which means, yeah, surely it can extend for another 2 to 3 months. Yeah, people are stupid, and they all trade short-term momentum, and I goddamn can't price that in because they're stupid, they're gonna get it wrong, and I just don't bet on when. All I know is that we have all the evidence for it to trigger anytime from now on and to the next month, okay? We have this recession coming. It's definitely inevitable. Some people will try to push it further down the line to precede the election with the best kind of potential in economic conditions. That still means people see these things. The bond market clearly said it straightforward. There's no way for us to avoid that recession. It's going to happen, and we also know that it will be inflationary. And that's the problem. That means we're going to get into stagflation. The cycle says basically we're in this for 4 years. Meaning this cycle around isn't just yet another kind of 2 years ranging signal. It's not going to be this. Not like 2015, it lasted 1 year. This one, 2 years. This time around, it's going to be 4 fucking years, folks. It's going to be long and painful, and people yet don't see it coming. They just think short term, just how far can we go in the S&P 500 until the next week, until next month, until next earning, whatever shit like that. It's very, very dangerous, folks, because I tend to say, I have a track record to say when I oppose the market, I generally get it right. I don't mean that it had happened 2 to 3 times and it's going to be more than enough. I have all evidence supporting this time around. I'm probably going to be right again. That doesn't mean I can time. That doesn't mean I know how far we will retrace. I don't know anything about the structure of the range. I just know one thing. I think big rotations are going to happen. I've mentioned all that rotations because I've seen the distortion for nearly quarters now, which means we have that RSP-SPY, which means people have loaded up in a handful of names, and this is going to be unwinded in the most volatile fashion, which means I think it's time to look away from the top 7 into the remaining 493. Some of them are zombie companies. Don't get into this. Get into the ones that are making actual profits and that will be able to pass on the extra prices of inflation to the consumer, which means we're talking about kind of less fancy stuff, like the things that we actually need to live. that like the electricity companies, the all sorts of things, like energy prices are going to rise, and you're going to pay the bill. You don't have any other choice because we all need that. Commodity prices, hard commodity prices this time around, like the metals, the precious metals, the rare earth metal are going to rise. This is the kind of inflation you just can't buy yourself out of because you're going to have to buy it from other countries. And get it right. You can say, yeah, but remember that we're going to print money. Yeah, you're going to print money and you're going to devalue your currency, which is going to make the price of those same rare earth metal and hard commodities even higher, which means you're no longer going to buy yourself out of this. It's not possible anymore. Back then, the US were able to sell their debt to the rest of the world, which helped them finance deficits. Nevertheless, this time around, it's not happening. No one wants the US debt ever again outside of the world. Not the emerging markets, not the Chinese, not the Japanese, not the Europeans. So this time around, the US consumer is going to have to pay for that debt. And there's only one way it's going to happen. Either a default, which means you're going to buy into a coupon that's never going to happen, or you're going to take inflation. And damn, it feels like inflation will win. So expect this to happen as the economy slows down because of the increased producing costs of necessary fucking stuff. I think high margin companies like the tech sector are going to fall under their own weight, which means they're not going to be able to pass on the extra prices to their consumers. Are we really, guys, spending billions on actually AI or whatever like that? No, we're not. So these big tech companies were spending billions like crazy, buying freakingly expensive chips. They're not going to be able to buy more in the future because their prices are going to start skyrocketing and no one will be able to pay for them. So I have a big problem for NVIDIA, not necessarily now. Like we said, they're manipulating metal prices, so producing costs are still somewhat relatively affordable, but don't expect any of this to happen when the crisis triggers. Because by the minute the US market makers stop manipulating metal prices, you're going to see things like silver going bonkers, you're going to see all of these rare earth metal going crazy bullish as well. That means NVIDIA crashes immediately. I don't know when, I just know it will happen, because the distortions are clearly visible, they've lasted for long enough, these distortions have happened for more than 2 years now. So that means it is from 2 years now on that we have seen those distortions in prices repeatedly said, it's going to crack, it's going to crack, it's going to crack. That doesn't mean it will V-reverse and happen overnight, but from now on, the maximum pain point is probably near. That means we have tried everything. Could still last another few months trying to hold everything together for the election. But the reality is anything that's going to be done now to stop that recession is going to immediately translate into higher price costs for absolutely necessary basic stuff, which means margins are going to be destroyed. Bubbles are likely going to suffer and or eventually pop in the meantime. The rest of the market, which is actually trading at PE ratios over 5, which means a significant share of the actual US economy is already pricing in that recession. And it's pricing in like it was deflationary. And if it turns out that it's actually inflationary but still recessionary, these assets may actually retrace. That doesn't mean they will bonkers go crazy, but that also means that those assets will be able to pass on to the consumer will have increased revenue. That doesn't mean they will increase their net revenue because their margins will still be crushed, but their revenues will go up, which means there's not a fucking chance that the actual company's prices, because most of the time this company have huge balance sheet assets, which will increase in value. There's not a fucking chance these companies go down in price. So the reality here is that companies that have real, tangible goods in the balance sheet may see their value increase. Certainly their margins will go down, but the price of the underlying share price of the asset is expected to even potentially rise. Even in a recession, because that's the kind of recession that no one has been used to for the decades in the past. Probably none of the living traders today have experienced that environment. They all have experienced the massive booms and deflationary bust when we flush some excessive credit in the economy. This time around, not going to happen. The economy is over-leveraged and some companies will die. Yes, the zombie companies will probably die. But also remember that all other companies will be subsidized, which will further fuel the inflation, which means those who expect rate cuts are probably wrong. There will be some but not all of them. Those who expect massive rate cuts are definitely wrong. At any moment a dollar finds its way into supporting the economy, it's going to immediately translate into inflation, because it's either going to raise the actual commodity costs, or it's going to devalue the dollar, and pretty much a combination of both, which means for a US citizen or a US company, buying those necessary commodity, hard metals or rare earth metal stuff is going to be very expensive, and none of them, not all of them will be able to pass it on to the consumer. So some companies will see their margins destroyed, and if they trade at 30 or 40 PE ratio with not a lot of tangible assets in the balance sheet because they just bought a freaking lot of GPUs, yeah, might not be the kind of tangible assets which will increase in value in the future. Yeah, so that's really the kind of thing that won't price in the increased costs of producing. Actual boring producing companies like industrial, energy sector, healthcare, all the kind of things that will be either subsidized by the federal government, because we actually need health fucking care, we actually need fucking energy, and we actually need industry to actually keep building stuff. So this is really where I think we're headed. When I talked about the value crisis, it's going to happen this time, folks, and I think we have all the evidence that it is coming in the near-term future. Not the future fancy stuff when I mentioned it back then, that it's going to happen, get prepared for it, don't go into the bubbles and stuff like that. Now is get the fuck out of the bubble, get into the value now, not later. That doesn't mean sell the whole thing and wait for prices to collapse 30% and buy cheap, because that's not going to happen. It's going to be a massive rotation, which means the S&P itself may consolidate, but some assets will go up in value. And a lot of assets will go down, and specifically the ones that people fancy now, which is a reason why I think we're in this kind of psychological mindset of the market, where I oppose this sentiment. I am clearly a contrarian again. And I think this time around, probably I will be right as well. Future will tell, and maybe, guys, you will take on that video, send it to me 10 years from now in the future and say, oh, look at that asshole. He just said that, and then the market goes bananas, infinity bubble, whatever. I could be wrong, but if I am right, for the next 4 years, shit is going to hit everyone who follows the current narrative. Get the fuck out of the crowded trades. They can crash violently. Get into the real names now, because they will probably absorb most of the downside. Just play that rotation. That means just don't be bear on the S&P like crazy, but don't be a bull either. It's probably going to consolidate. It could happen in a volatile form, because when I say a range, I would tend to say 4 years from now I expect us to be at pretty much the same valuation. That doesn't mean I know anything about how we'll do it. We could do it in somewhat of a coordinated fashion, like we violently retrace to the support, rebounds, could do double top or whatever, and just be there 4 years from now in the future. Just made an ABC pattern or whatever. We could do it like that, like a short first consolidation, a second one, and a long and painful second one, retracing 23%, termination. We could do it more violent, like we could do this, 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 and then this, and stabilize. Okay? We could do all sorts of things. We could do very violent, we could do this, okay, and a slow, painful recovery, like we could do something like that, and we would still be at the end of it by squeezing the momentum. We could do this, we could do a triangle, most volatile stuff, okay, that's also a possibility. We could also do the fancy stuff like we do this, 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 and then boom, boom, boom. I don't care. All I'm saying is I think we're going to be near the 4,500 in the 4-year timescale. God knows how fucking stupid up and down we're going to go in between. That's a matter of rotation. All I know is that from now on until that point, a lot of the money will have changed hands from those big tech names into far less fancier kinds of assets, and only after that rotation fueled itself and terminated, we'll eventually get a bull market again. Which means if the market goes bonkers and sell everything at a discount, I'll buy. Even the tech, if for whatever reason the tech is crashing like crazy at to significant discount when they still have profitable margins, even though their margins may get crushed in the process and they have traded at stupidly outrageous valuations, I'll still buy them. Remember what I said earlier, it's not a bear fucking market. We're gonna go into bear market territory, that I know for sure, but it could take 4 years to get there. So also don't be stupid enough to think it's going to collapse first. Though it's not like sell it all, like sell the S&P baby. It's more like hedge your fucking self. rotate the money into the safer places before everyone does, and then let the thing happen. Because it may be quick, it may be coordinated, it may rotate slowly, it may just be boring. And if it's boring, and if you've been among those people betting and begging for volatility for the last few years, you might end up being proven wrong. Because I tend to say that because of what just happened within the next few days. I was among those who said, yeah, I think we have all the elements for a perfect storm. Like, now the yen carry trade's getting fucked up, we have evidence that the recession is going to come, people expect more rate cuts than the market will be able to deliver, and people expect that anyway we're going to print money to infinity when we will maintain very cheap price of production, which means USD WTI is expected to stay at 75 or so when I see it going 100. Silver is expected to remain very cheap because, yeah, remember, industrial metals are for free. Yeah, good luck with that. When you're going to see a subsidized economy, this thing will nearly double in price. So the thing is that if I'm right, and if I'm correct with inflation of hard commodities, it will be translated to inflation in the producing price all across the economy. Because if you don't understand that the actual industrial metal translates immediately into nearly every part of the commodity, into every part of the society, don't really understand much, because we need a lot of those metals to produce electricity. We need a lot of electricity to do any fucking thing in the real world, not to mention that we also need hard commodities to produce all sorts of things. So it's really, really complicated. It's not just like, yeah, recession means slow down economical activity, so the industrial metals go bust. No, it's not. They're going to be more demanded and the price are going to rise. And any attempt you're going to make into subsidizing it is going to raise the price even more. And that's really how it is. We have this big problem with the US debt, who is now no longer going to be exported in the rest of the world, which means the US citizens are going to have to bear the cost of the increasing actual money supply, which means this time around inflation is going to go straight into your pockets, folks. And there's no way the government can buy it out, because it's going to be spending dollars to try subsidizing things that you buy in other forms, which means we're talking about hard stuff and you're going to have to pay for it. When you spend, you're going to devalue. Devalue means the rising price of these assets. So there's no way you can market make it by having JP Morgan somewhat manipulating the prices of silver and all sorts of stuff like that. When these things will start to blow, the prices of assets will go back to where they should be, and it's going to shrink the actual consumer's capability. Which means when the US is the most sensitive to consumer spending kind of economy in the world, I expect it to shrink. I'm not saying collapse, just shrink. Back to the value, back to the essentials, as the price of those essentials rise along with it. It's not going to be a pleasant 4 years for the American. I doubt the Americans will be the only one in that system. I think they definitely will bring along some of the rest of the world along with them, but I think they're being the one suffering the most. That's also the reason why I've talked about the China to US arbitrage, which everyone is trading in the other direction, like China is bullshit, got to buy the nice fancy US. I entirely see the opposite, and I see nothing but the bottom of a long-term range there. And when it happens is we're here as well. I'm going to be among these sample dumbest guys who said right at the bottom, don't follow the fucking narrative, we're pretty much in a range, and I see the boundary of it pretty much nearby. That's exactly what I say here with the S&P. I don't know where, I don't know when, I just know we're very close. So that's all I'm saying. I think we're going to be at lower valuations in the 4-year timescale. Could go higher in the interim, I don't care. I don't think we're just going to go lower afterwards. Okay, so that's all it is. The higher we go, the lower and the more dangerous the fall will be afterwards. I think the S&P valuations 4 years from now will be 4,400, 4,500 or so. Could go lower in the interim, and that would be the most interesting buying opportunity if it happens. If I see an S&P 500 trading below 4,000, could be damn sure I'm going to dare to say, fuck it, even though people think we're going to go to the moon, to the cave, I'm going to buy some assets. But remember, it's not buy them all, like buy the S&P. It's going to be at that price. There are going to be some fairly cheap assets to grab. That doesn't mean buy them all. That just means look into the index itself and try to figure out the ones to pick and the ones to get rid of. Because some assets will die. Don't just buy because it's cheap. Some of these assets will die under the weight of the actual cost of the debt. Because if you understood what I said, the cuts, or the rate cuts, will not bring us anywhere below 3.5%. That means 3.5% on the tremendous amount of corporate debt that is still livable in the US now means some will die. Okay? So be very cautious. Not that easy as just buying them all. And eyes closed, like Passive investing, I think, is the least of the most profitable strategies to make in the next 4 years. Stock pick, do your own research, value assess, cross-correlate, cross-study assets within a sector. There's no way you can just buy one sector. It's going to be among the energy companies, some are over-leveraged and going to die. Some will survive, some will be subsidized, some won't. It's hard to figure it out. It's going to require technical and professional skills. Hence why I've warned you about the crazy difficulty I foresee in the next 4 years. Where on the other hand, all across the board, I see just a bunch of an experienced trader in YouTube basically saying, banana zone, folks. It's going to go bonkers. Just buy the shit. No, 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 no. I entirely disagree with that. And it's definitely worth the same for crypto. If you buy into those stupid speculative names, not doing your research, keep on playing the stupid narratives like sell ETH for Bitcoin. I mean, definitely, folks, you're going to take a slap in the face. The thing that I'm trying to say is that I don't know the nature of it. All I know is that it can be violent. It can be like that. It can be under a catalyst. What I'm saying here is that I have all the evidence suggesting that if anything goes out of the ordinary, an external catalyst that we haven't thought about, like the gray swan, doesn't have to be a black swan. We know there's a lot of impending shit in the world now. The kind of wall of worry we have is pretty damn big. We know all the things that could hit the market. We very likely hope that none of them actually triggers, because if it spooked the market, the volatility could definitely spike up. What we've seen with the yen carry trade could have been a trigger. We somehow gaslighted it, but be very cautious with that. That doesn't mean another one won't hit. All I'm saying is, from now on, we had our chance. And it seems like the market doesn't want to go the volatile way. Hence why I can't give you an additional information. I don't think it's going to be the kind of crash that the bears are expecting. I think more like a slow kind of consolidation towards supports. Okay? So that's all I'm thinking. Rotation is very likely going to happen, and it's not going to be pretty. That means things won't collapse in a day and others won't rise in a day. It will take some slow grinding move of stock picking, and be very cautious on both your profit-taking targets, because they may not last very long, and also buying on some supports. Get a plan. Just don't react to the market in the next following 4 years. That being said, I'm going to leave you guys with that. You will have that video to either call me the biggest fool in the place, or you would eventually have the video to say, yeah, damn it, this motherfucker had it right once again. It might not have it right with the timing, but once again, my job is not to say things when they happen, but to get prepared. One step ahead of the market is how a good trader is. I'm going to leave you guys with that. Bye-bye.